Hi all, welcome to Market Feed, the channel where you can get the best and most practical finance and stock market content in India. And today we are going to discuss an intraday equity trading strategy which is very useful for beginners. It is one of the few strategies that I've seen even veteran traders take or use for the last 10 to 15 years. So the name of this very easy strategy is OHL strategy. Open is equal to high-low strategy. So we'll be explaining it in very detail on how to use it, when to use it, and I'll be sharing a tool with you as well with which you can screen these OHL stocks for free and start trading without any further delays. So yes, this is Ajay Ajit. Welcome to Market Feed. So before getting into the strategy, we'll quickly summarize what a candlestick is and how to use it in this context, right? So candlestick is nothing but a visual representation of price movements over a time period. And here in this particular strategy, we are going to be using 5-minute candlesticks. That means each candlestick is showing you a visual representation of what happened in the stock or security price over the last 5 minutes. And a green candlestick means that it was a bullish candle, and a red candlestick means that it was a bearish candle. So if that is clear, let us move ahead with a few chart examples so that you're learning this strategy very effectively. So let's assume this is a chart of any security or any stock, and each candlestick that you see here is of a 5-minute time frame. The market opens at 9:15 a.m. and you're observing this chart at around 9:30 to 9:45 a.m. But what do you think is unique about this chart? You can see that the opening level is the lowest level of the day. There is no wick below it. No candle has moved below the opening level, and you can observe that opening level is the low of the day. And just by looking at the chart formation, what do you think is the current trend or the possible trend of that stock for the day? Yes, it is a bullish setup in the stock that we can see right now. And on the other side, if you're looking at a second example where the opening level is the high for the day, if the stock has not crossed the opening day at all, then we can think of it as a bearish setup. And that is the entire strategy. It says that if the open is equal to the lower level of the day, you can go ahead, take a buy trade in that stock. And if the open is equal to high level, you can go ahead and sell that stock or short that stock. So now you have identified the conditions. Now the next step is, out of all the hundreds and thousands of stocks in the stock market, which stock should you be trading? Right? And how do you find these stocks which have these conditions enabled? That's what we're going to learn with a very simple tool right now. So here in this tool, we'll be looking at all stocks which have FNO enabled, which means futures and options enabled. And we will be looking if these conditions are being met. That is, if open is equal to high or open is equal to low is being shown, right? So yes, here are all the FNO stocks. And you can see that few stocks have these indications here in the Excel sheet. Right, so we'll go ahead and we'll select only the bearish and bullish filters here. So you can see that a lot of stocks here are displaying this condition. So what all are the conditions I've given in this Excel sheet? It says that if the open is equal to high, give me bearish. If the open and high are very close by, that is, I've given a buffer of 0.06%. So if that buffer is very small, if open and high are very close, then also it could give me a bearish indication. On the other side, if open is equal to low, it will give me a bullish condition. Again, if open and low are very close by 0.06%, it will give me a bullish confirmation once again. So now you understood how the logics work, but since there are a lot of stocks here, let's go ahead and select only the Nifty 50 stocks, right? So in Nifty 50, if you're looking at it, we have 2 stocks which are giving a bearish signal and 4 stocks which are giving a bullish signal. So now the next thing that you have to do is you have to go ahead and look into each of these charts, and you have to follow the next conditions we are going to discuss about next, which will help you enter a trade and hopefully exit in profits, right? So we'll get into that. So as we learned in the previous video, let us break down this OHL strategy into 3 parts. The first one, where you think about an entry criteria, where you try to determine the trend of the stock, right? So the trend of the stock, how do you get it? You look at the OHL strategy, you look at the screener. Yes, it is slightly delayed data, but it is okay. You come here at 9:30 to 9:35 a.m., you'll be getting this indication. So the first thing you've got is a trend indication. The second thing that you need is the entry criteria, and the last thing that you need is the exit criteria. So that is what we are going to discuss today. So the entry condition is also very simple. You have to come here into this chart at 9:30 to 9:45 a.m. and you have to see if this trend is continuing, which means if open is equal to high is still relevant or open is equal to low is still relevant. So here in this chart, let's say that open is equal to high is still relevant when I came here at 9:30 to 9:45 a.m. So let's say I come here in this chart and I'm waiting here, right? And if I'm a good price action trader, automatically you can see that this level is very, very important for the stock, which means that the low was taken at 2,988. You can go ahead and you can take a new fresh selling opportunity when this low is broken again with strength. So entry criteria, if at the time the trend is still relevant and the price action gives you a buy or a sell signal. So here let's look at Reliance and how it has performed, right? So this level seemed important because it took support when I have opened the chart here at 9:45 a.m. and you can see that the next time it broke below this, right? Maybe you can even take a trade here. It would not have hit your SL, and if you have taken a trade here, right, you can see that easily nearly 16 to 20 points you'll be able to catch in the stock. So now we know the trend criteria and we know the entry criteria. So the third one that we have to think about is the exit, right? So the strategy, if you're following the strategy is in its pure form, right? So it says that you have to put an SL, your stop loss should be anywhere above the high point of the day, right? So it says that your stop loss should be anywhere above the high point of the day, but it might not always be practically possible for that to happen. So you can set a stop loss based on your price action rules. So here, let's say my stop loss is easily kept above this first 10-minute candle here, right? So this 920 candle, I am confident to keep my stop loss above that range. So around a 13-point stop loss is what I can afford here. And similarly, your target should be in such a way that you're getting at least more than 1:1 risk to reward ratio, right? So you should be targeting somewhere around 15 or even 18 or 20 points in this trade, which is the right way to go based on your good risk to reward ratios. When you're looking into the chart here, you might feel that the screener tool is wrong, but do not worry. Whatever this wick you're seeing is a trading view prices, but we are only looking at the NSE website prices. That is what the screener tool gives you. In this trade and the strategy, you can also use few supporting points to increase your probability of winning this trade, right? So the first thing is you can look at the index trend. You can ask me why there were 4 to 5 stocks in this list here or 6 stocks in this list here. Most were giving bullish, but I have only looked at Reliance and Kotak Bank here. So Reliance, the trend here for Nifty today, right? Let's quickly look at that. The trend here for Nifty has been bearish throughout the day, right? After opening, Nifty has fallen nearly 154 points. That means the entire market trend is bearish. So you can look at this bearish confirmation from the market and the basic indices to make sure that you do not go against the trend in the stock. So automatically I've avoided the first 4 stocks here in the screener and I'm only looking at either Reliance or Kotak Bank. So you can also look at news and events. So today is a budget day and it is going to be very volatile, right? So you can keep your targets and stop losses as per this rules or as per the news and events. So here you know that it is going to be a volatile day. So only when a price action strong confirmation is there, as we saw in Reliance earlier, when the day low was broken and taken out, you can think about entering a trade there. So that means either look at the news surrounding that stock. You can easily see it here in TradingView itself. You'll be seeing a lightning button here on the bottom. You can click that and you'll be seeing the major headlines for the stock for the day, right? And also you can pair other indicators as well as other price action techniques to make sure that you increase your probability of profit. And the next thing is you have to enter more high probability trades, right? So you identified one stock, which is Reliance, and it has been going really well. But what about the other stock in that list, right? Which was Kotak Bank. So Kotak Bank here also is giving somewhat of a OHL signal, right? You can ignore this wick because this is not the NSE data. We are only following the NSE data here. So you can see that you came here at 9:30 to 9:45 and probably after breaking the day low is where you'll be entering the trade. It is a bit tricky here because as a price action trader, you can see that multiple times over the last week, right? This level has been playing as a good support level. And that is where even the wick today is present, right? Which is 1555.9. So even last day there was a wick around this region, and today the breakdown below this region has not happened. And if it does, where should the target be? The target should be at 1400 and 1750. You should never think about how much money do I want to make from this trade. It should always be how much money can I extract from this trade, right? So it looks very logical that your first target or your first thought process should be to keep your target at this 1750 level. It has acted as a good support earlier. So when this level is broken, you can think about entering a bearish trade here. So yes, now you know the entire crux of the strategy. One more thing that I want to remind here is our intraday position sizing calculator. Let's say you're a beginner and you're starting to trade and you're having a capital of 10,000 rupees. How much should you be putting into or how many stocks should you be buying or selling in Reliance? Let's quickly look into it. So let's say you're shorting the stock at 2,980 and your possible stop loss is 3,000. So what does this position sizing calculator tell us? It says a quantity to sell here is 5. Right? And you can ask me, hey, my capital is 10,000. How can I take a trade for 3,000 into 5? Right? That is how much I'll need, which is 15,000 rupees. But hey, the answer here is you can take leverage. Leverage is not a bad thing for you. Leverage is only bad when you do not look at anything like this position sizing calculator where you're not thinking about the risk. But here we know our risk. Our risk is very defined. Your target here, if you make it, it will be 20 points into 5 quantity, which will be just 100 rupees, right? You put 10,000 rupees in, you got 100 rupees. But it will also make sure that even if you're losing this trade, even with leverage, you will not be losing more than 100 or 80 to 100 rupees. That is what the beauty of this position sizing mechanism is. So yes, leverage is not a bad thing in my opinion, but I would say that going in without a plan, right? Without this calculator, it will be hurting your entire account very, very deeply. So make sure that you please follow these rules. I've seen a lot of beginners make this mistake. Make sure you do not do it. And also ensure that you're keeping the percentage risk of account very reasonable here, which is, I would say you can either keep 1% or 0.5% per trade. In a single day, you should never be risking more than 2% in your entire trading capital, right? That means you can take multiple trades, but out of all the different trades, you should be not risking more than 2%. So here you can keep 1% since we have only 2 trades which are possible today, Kotak and Reliance Bank. If there were 4 trades, you can think about keeping 0.5% here in the calculator. Also do remember that there are charges involved. If you're taking this trade for 10,000 rupees and you're buying and entering the stock, you'll be charged 20 plus 20, 40 rupees as brokerage in most of the brokers. And after this, you'll also have the government charges, GST and taxes as well. So there it will deeply hit your profitability. So if your target was to make 100 rupees and you're losing out, let's say 50 rupees to charges and taxes, imagine what will be your level of profitability at the end of 1 month after having multiple winning trades and multiple losing trades as well. So please ensure that you start with this capital, you see how your performance is without giving much weightage to charges and brokerages. And if you're being a really good trader, then you can think about increasing your capital. I would say even an intraday trader, even a small beginner intraday trader should be coming into the market with at least 50,000 rupees as capital to trade. So that's all we had to discuss for this video. I'm reminding you that the Ochel strategy is a very, very powerful strategy. It's being used by beginners as well as veteran traders even throughout the world, not just in India. But the people who win are those who take their intelligent price action based decisions, those who decide to inculcate or incorporate multiple technical indicators into this basic setup. And you should also be very, very mindful about your position sizing as well as money management. So that's it for the video. Let me know about any thoughts you have about the strategy down in the comment section. And if you want to learn about any new strategies or technical indicators, make sure you comment that down below as well. As always, this is Ajay signing off. See you all in another video. Bye bye.